Right, hello. Zach Howard here. Welcome to my channel. Thank you for joining. I'm going to do a presentation today on one of my favorite topics, which is gold. Been studying gold 5 or 6 years, and really how gold relates to everything in our financial world is really a truth serum. And we are at a pretty historic time when it comes to gold. Um, at the nice psychological round number of $3,000 an ounce US dollars. We are starting to see massive mainstream attention into gold uh, in otherwise a very small segment of the financial world studies and talks about gold. So gold's at record highs, is at that psychological $3,000 number. What's going on? What's next? Narrative follows price. So a little bit about me. Um, I'm a commercial realtor, investor, market analyst. I used to be a banker, commercial banker for small, medium-sized businesses, student of financial history. And I've been looking at business and studying money and markets since I was a kid. I just love the game, trying to make sense of the crazy monetary world that we live in, with lots of illusions that are created by central banks. No more so than fiat money and what it does to distort price signals and asset prices. I try to do this video around gold and other instances around monetary policy, how it ties back to real estate and how we look through the lens of the price of assets in the denominator of the measurement, which is fiat money, whether that's Canadian dollars, US dollars, what have you. I came from a traditional finance background with a business school, Keynesian economics kind of learning, uh, thrown into a banking world where you're taught the same things as everybody else. We're not really taught to think differently and have questions about how some of this stuff works. And it wasn't until I really started studying stuff on my own the last 5, 6 years, especially in 2020, with COVID and shutting down the world and how much money was created, that I really started to say a lot of this stuff doesn't make sense. But what did always make sense to me from the very beginning was understanding gold and how gold really represents truth in otherwise a fictitious false world with price signals. This presentation is just for entertainment, maybe some educational purposes, but definitely not investment advice. So we are hours away from that psychological $3,000 an ounce gold price in US dollars. My wife's sick of hearing me talk about gold for years. My kids know all about gold. It's a big topic in my household for years. And my wife reminded me, she said, years ago, you told me when gold hit $3,000, you would throw a big party because you thought you would be fiat rich. Well, I don't really feel fiat rich. I feel like any other day. And it really speaks to what's happening in the world of the debasement of currencies and the loss of purchasing power, but everybody's daily lives continues to roll on without really taking second thought for what's happening underneath the surface. This chart of gold is over the last year, massive run up for a asset that doesn't usually move very often. Gold is referred to as money because of its volatility characteristics. Similar to the US dollar and even US government bonds, the price action does not really represent something that would be volatile like a commodity. Gold is also considered money because it can be exchanged for goods or services pretty much anywhere in the world. If I have a 24 karat or 22 karat piece of jewelry, I take that to a market in India, the Middle East, Asia. I can exchange that for some type of goods or services that I need. I might not always get a close bid-ask spread for the spot market actual price in the daily uh, financial markets, but I'm going to be able to exchange it for fiat local terms to get what I need. Me living in Canada, if I take a $50 Canadian dollar bill, Justin Trudeau monopoly money, to Middle East or to Southeast Asia, I would probably be laughed out of the store with that piece of paper. Gold will be able to transact for me pretty much anywhere in the world. So back to this chart. We had this massive run up earlier in 2024 when we seen potentially that inflation was easing on its massive run up over the previous 2, 3 years. We had another big run up into the fall November election timeline where there was still uncertainty around the outcome, who would win, and what would the societal impact would that be in terms of an actual winner? When that kind of cleared and there was certainty there, the uncertainty of the market capital fed out of gold temporarily post-election until about early December, and it's been on a steady upper threshold run since. Um, there's a couple of factors affecting this, which we're going to cover here now shortly. But looking at a long-term chart of gold, this really points out the debasement of fiat money, the US dollar, ever since 1970s when the US came off the gold standard. Throughout the 1980s and even early 1990s, it wasn't really a thing that governments would have excess deficit spending. There was always some kind of political party on the other side, media, what have you. Uh, Entrepreneurs in the business community that would hold government somewhat to task on their deficit spending. That all went out the window in 2008. We had the great financial crisis, which was caused by instruments created out of Wall Street. With that uh, risk off event in 2008, the central banks really stepped in for the first time with this monetary heroin known as money printing and really said, we can get ourselves out of shit by printing money via the Federal Reserve and supporting the US Treasury and the banking sector and what have you. And with that, it was a real attention paid to gold, and people said, you know what, this is really uncertain times. We're gonna start allocating more of our capital to gold instead of previous fiat instruments. Then 2013, the mid 2020s came along and gold kind of suffered a decline period up until fast forward 2020. We get COVID. We get this man-made disease that comes out of China, uh, shuts down the world, businesses shut down, people have no ability to earn their traditional living that they were used to, and out comes the money printer from central banks again to ride the rescue. Now, 2025, we are seeing a different story play out. We are not seeing the money printer really rev up yet, like is expected eventually here in the next crisis. We are seeing physical demand for the actual metal. We are seeing people, sovereign wealth funds, institutions, central banks around the world saying, give me my metal. I want to hold it in my possession. Physical demand is breaking the paper market underneath the surface. This has massive implications for other markets in this story as it continues to play out. So how do we get here? The M2 is the money supply measurement of money creation in the US going back to the 1960s, 70s. Not a real big impact here on the chart. You look at 1990s, we start to get some turbulence around 1998 with the LTCM, long-term capital management hiccup. The 2000.com crash, acceleration then in money creation. Fast forward to 2008, as just previously mentioned, you see that the chart really takes off. And then 2020 was really that sweet spot where the central bank money printer did its thing. And we've seen money supply grow on average 7.2% since 2008 in the GFC. Then it's since accelerated on average 10.4 since 2020 in the backdrop of 2021 when the US basically created 21% of all money in existence in that one year. But it's not just the US. All fiat currencies are showing a higher price in gold. It's not that gold is going higher, it's that these currencies are going lower in real terms, which is gold, which is 5,000 euro money. Some countries, like China, like Japan, are much further along in this story, which is financial repression, debasement of the currencies to continue to support government spending and excess debt around the globe. China, with its massive property bubble, imploding. Japan, which is basically the first country in the G7 to enact yield curve control to keep its government looking solvent over the last decade. You've seen the price of gold in yen and Chinese yuan accelerate much faster than in Western currencies like the euro, like the Canadian dollar. But it's only a matter of time for those Western currencies also match up what their Asian peers have already done. They're all on the same path forward. This chart here from In Gold We Trust, the annual report, shows us going back 13 years of each currency, how the debasement has accelerated faster in some versus others. For instance, there you see a Japanese yen debased against gold 42% almost in 2024, the euro 35%, Aussie dollar 40%, Canadian loonie 38%. Average across those 7, 8 currencies last year was 34.5%. The previous year, 15.5%. So it's a continuous theme that's now accelerated here in this backdrop. What's changed? What's changed here now for the first time in a long, long time, probably post World War II, people that have their gold stored in vaults in London, in the COMEX warehouse exchange, are saying, here, give me my gold back. I want to put it on a plane. I want to deliver it to me in Dubai, deliver it to me in New York, deliver it to me where it's in my custody. I no longer want to have it in your custody with a paper receipt saying I own it. We have seen roughly $22 billion come out of the COMEX warehouses so far in 2025, 55 days into the year. This is unprecedented. We're talking 8 million ounces thereabouts equivalent, which is equivalent to one full quarter of global gold mining production already 55 days in the year. That's how much gold has come out of those vaults. And what's happened is there's been a queue steadily increase. Previously, 24, 48 hours, you could have had your gold on a plane out of London. Now they're saying, listen, it's going to be 3, 4 weeks. We got to back up in orders and a lot of talk to really delay what's probably not enough gold to go around for everybody that wants it based on their paper contracts that are out there. The GLD is the ETF that holds the largest gold holding supposedly in the world. ETF stands for Exchange Traded Fund. The gold that is custodian for GLD is managed by both the HSBC Bank and JP Morgan Chase Bank. Coincidentally enough, as we've seen over the last start of 2025, the orders coming out of the COMEX are really headed up by both JP Morgan and HSBC. Now, is this GLD bringing gold back to New York to really replicate the claims they have on their $78 billion in assets under management? But as I previously mentioned, we've seen withdrawals out of COMEX of roughly 22 billion so far in 2025. Total assets under holdings of GLD is just 78 billion. These institutions don't exactly have a stellar reputation when it comes to precious metals and doing the right thing. JP Morgan been fined and convicted for almost $1 billion in spoofing precious metals back in 2020. Scotiabank also fined for the same practice. You go down through the list of bigger banks globally, Morgan Stanley, Barclays, they all have played in rigging of the price of gold and silver in the commodities precious market. Famous trader here, Peter Hambro, wrote about this in 2022. A London gold trader talked about how the manipulation of the gold price by the bullion banks and the big precious metals trading houses was keeping the underlying price floored from what the actual real market demand is. We are now seeing that break with physical demand coming into the market. It's getting harder and harder for these larger players to play the same games they have played year after year. What's disheartening about these type of companies, they get fined, they get penalized, but they continue to be able to interact and trade in the same market they've been convicted of wrongdoing. Nowhere else in any other private industry, if you were found that you could continue to manipulate the market and participate. But that's the situation. Gold to central bankers is like sun to the vampires. That's what Peter talked about in his report back then, because he knows gold is truth serum to all the falsely produced derivative products that are out there in central banker land that's based on a fiat money system and a centrally planned environment where you can have fractional reserve money where people can have claims on stuff that doesn't actually exist. The money is not actually there. Gold is the building block of all money. And JP Morgan said back in 1912, gold is money and nothing else. Since the dawn of a new era post 1971, financial derivatives products, the euro dollar market, we've seen a massive influx of financial assets around the world, with still gold as the base layer of all this, because it is the building block of money from way back 5,000 years ago. But now we have stock markets at 100 plus trillion dollar valuations. We had global debt to continue to be refinanced north of $300 trillion. We have real estate assets north of $600 trillion. And then we have the over-the-counter OTC derivative contracts that's based on all those prior assets and all bundled together as Wall Street products. That is what fiat money is. It is a facade, really, at the end of the day. Whoever controls the volume of money in any country is absolute master of all industry and commerce. And when you realize the entire system is very easily controlled one way or another by a few powerful men at the top, you will not have to be told how periods of inflation and depression originate. We see that through the central bank money printer, which I previously pointed out in the money supply graph. On the right there is a scene from my favorite finance movie, Margin Call, where the hedge fund managing director is having supper with the trading floor manager the night before the fund goes under. And he refers to the trader as what it is. It's made up. It's make believe. It's a confidence game, which is what fiat money is. It's pieces of paper with pictures on it so that we don't have to kill each other just to get something to eat. And that's what it is. Gold is the opposite of all that. How much gold does the US actually own? Lots of controversy here in the last week with a potential auditing of the Fort Knox gold reserves. Elon Musk, Doge, President Trump, all weighing in. There's conspiracy theories out there. Some of these COMEX deliveries are actually going back to the US government for the Fort Knox holdings. Maybe the gold is not always there at 8,133 ounces approximately. The gold on the US balance sheet, the US government, was priced at $44 an ounce. To reprice it today at roughly 3,000 an ounce, it would have a paper accounting gain of approximately $800 billion. There's a massive debt problem with the US 36 trillion and counting $1 trillion a year annual increases to its government debt. However, if gold is reevaluated at today's current market pricing of 3,000 an ounce, or perhaps even much higher at 10,000 an ounce, the asset liability mismatch of the US government balance sheet is not so out of whack. Is a revaluation of gold coming? Is that what the price is pointing to? We don't know, but other countries are in a race to get their physical gold as well. Italy, France, Germany, all significant holders of physical gold. China, Russia, potential to continue to upload increased assets on the balance sheet side of their debt problem, just like the US with added gold as well. I've been writing about gold, like I say, for 5 or 6 years. It's probably one of the most interesting subjects uncovered in traditional finance and money. I talked about how I've seen it go into all-time highs back 2 years ago. It wasn't I was Nostradamus. I could just see the writing on the wall in terms of politicians and their willingness to spend money out of thin air with just strokes on a keyboard, like ordering a pizza, that they could just conjure up trillions of dollars and give it out to its people. No different than the Roman Empire back when it was falling. The debasement of currency, where the leaders of the Roman Empire whittled down the value of the coins, taking the silver and the gold out of those coins and replacing it with an inferior metal. It's no different than what we're seeing today with the debasement of currencies. This is an interesting chart. So Nvidia, Apple, Microsoft, Tesla, all these high-flying stock companies on the US exchange get all the limelight in the financial media. But if you zoom out and look back the last 25 years and just own physical gold, you didn't pay any attention to annual earnings reports, stock price, and you just sat on your gold, you outperformed the S&P significantly and at a much reduced risk standpoint. Because gold is gold. If you own it, it's yours and your party, no counterparty risk. There's nothing to really to have to oversimplify or overthink what gold is. It just is. So to summarize, the price of gold to me at $3,000 an ounce represents a repricing of assets around the world, so specifically hard assets, stuff that cannot be replicated and replaced easily with the money printer. It is people saying, I want the physical thing because I do not trust the traditional financial product I previously relied on to hold my wealth and to hold my purchasing power. Gold is an inverse to politicians that continue to build a promise to the world with no repercussions. It is truth serum to what they are and what they represent. You either believe in math or you believe in magic. And if you believe in math, you should own some gold. How much is up to you and how it suits your lifestyle and your financial needs. But more importantly, how can we look at the price of gold as it plays out into real estate, commodities, and our everyday living as we go forward? If we start to measure gold and our daily life and our daily assets in ounces of gold, the equation really doesn't change. You look at a price of real estate today versus 20 years ago, measuring the same ounces of gold at today's price versus back then is roughly the same. What's changed over time is the fiat money. And gold is truth serum to that BS. I look forward to what happens in the coming weeks and months as gold continues to accelerate higher. But the most important thing besides price is the conversation piece. And more people come to the realization of some of the stuff I'm talking about in this video. I hope you enjoyed the video. I'll continue to try to produce value-added videos like this on the channel. And if you could, please subscribe and give me a like. Thank you.